Hello, folks. Brandon Chapman today. It's another edition of the Theo Nightly video for Monday, August 9th, 2021. Commodities SKID as EVs are bid. Kind of the topic for today's class session or today's video. As you look at the S&P, I mean, we're basically flat on the session, right? We drifted slightly lower, failed to take out a new all-time high on the SPX again. As you look at the periphery with regards to small caps, for example, we're down about 0.5%. If you look at the Nasdaq 100, basically flattish on the session, up 0.16%. So really, for the most part, in the aggregate, stocks did virtually nothing on this session. The same is not true of commodities. For example, if you look at /GC, this is the gold contract. Overnight, really had some major pressure, dropped over 100 points quickly. We ended up down 1.78% today in gold. And really, this gold trade's really been derailed. There was some pretty decent bullish activity, back here, for example, late in July. But really, the comments from the Fed have really been more hawkish. And what we've seen is that we've just seen a stronger dollar. That's certainly represented by weakness in gold. You look at UUP, it's a proxy for the dollar index, for example, an ETF. It's up 0.2%, for example, which is mostly the euro/US dollar, which is down 0.2%. If you look at oil's down today about 2.14%, although we did finish off of session lows similar to gold. The point being is what's happening right now. The Fed is angling towards raising rates going forward. And on top of that, they're angling towards tapering, which is the beginning step, with many people anticipating the taper occurring more quickly. The jobs report on Friday is showing maybe the economy is recovering a little bit. There's a little bit of optimism right now and a little concern over inflation. And so when you look at bonds, the 10-year Treasury yield was higher today, about 0.27. So we're now at about 1.31% yield on the 10-year. As you look at the 30-year, we finished higher again, 0.29, so slightly higher, more than the TNX. So the point being is that the yield curve is steepening a little bit the last few days. And we talked about this possibility last week that we saw bullish indications from the options market in Goldman Sachs, for example, and in Morgan Stanley. And again, the rally was contingent on some selling in bonds, of which last Monday and Tuesday, there was bearish option activity in the bond market. And so we've had a nice rally out of financials over the course of the last week. That was last Monday's video that I did back here. So it's been a really nice week for financials. That trend may continue because as you look at the sectors that are leading and lagging today, healthcare is at the top of the heap. You got staples in there. You got financials and then utilities. So again, this rising interest rate environment or rising yield environment, certainly not bullish for utilities. But again, the healthcare is in there. Staples generally don't do quite as well, but you'll see today's move very minimal after the sell-off last week on August 4th. So again, we're seeing real leadership in financials. And today, at least, we're seeing some strength and a bounce in healthcare. Now, as you start to break down healthcare, where's the strength? It's in biotech. And we're going to circle back to some of those stocks here in just a second. But as you look at the bottom of the heap, it's energy. And why? Well, if we go back and we look at /CL, certainly there's some growth concerns out of China, the Delta variant, yada. The bottom line is there's some concern about real bottom line demand for oil right now. And that's starting to be reflected in the term structure of the futures market. What do I mean by that? Well, there's different ways to kind of draw, or different structures for the market. There's contango, there's backwardation, there's kind of a normal structure. For oil, normally there's kind of this S curve as you go out in time where prices initially rise, then fall, and then rise again. We're still in backwardation, but if you look at today's curve in red, that is it's a decent amount different than what we've seen over the last couple of weeks. So the yellow line is August 3rd, the blue line is July 26th. And what I'm focusing on here is the slope. The slope of the line is flattened out from end of July and early August. What does this mean? It's just the market's becoming less bullish. This is still a bullish structure. Backwardation is a bullish structure. We're seeing falling prices going out in the future. It's just that we're becoming less and less flat, which you've got to transition through that in order to obtain more of a normal structure where prices are rising at the beginning and then falling. So we'll see what happens right now. But right now you're seeing there's a more normalization of the term structure of oil futures, which right now is weighing more negatively, right? As we're starting to pass through potentially to a more normal curve for oil. Again, don't know what's going to happen, but right now anyway, you might expect to see a weakness in oil. Now the question is, how weak is it going to get and what's going to happen with oil stocks? Certainly more integrated names like Exxon today didn't do as poorly. It was still down 1% though, right? But then you got other producers like PXD, which is down 2.29%. So those that are more dedicated towards production are certainly probably going to experience more weakness than maybe those that are more diversified. As you look at names like MPC, which is a refiner, was up today before wilting later in the session. So falling oil prices can be relatively bullish for refiners, assuming what? The demand side's there. And if we look at RBOB /RB, we did rally off our lows in gasoline futures. So if we can see some upward lift here, this may help some of the refiners start to catch their footing and continue the trend that they've been on. With MPC, there had been some really strong bullish activity back here in later July, and it's worked out relatively well. Kind of looking for this thing to get back towards 62.50, maybe retest the prior high. But again, if the demand side really starts to turn, it may not get there. So let's turn our attention to one of the areas that has been strong today. In the financials, certainly your Goldman Sachs, your Morgan Stanleys have continued to show strength. But in the healthcare space, it's actually the biotech names. Those are the ones that are really playing it out very positively. Novavax, for example, was up 12% today. And what you saw right off the bat this morning, there was a lot of bullish activity centering on the weekly expirations. And you see this sometimes, right? Where it starts to build, it rolls out, and it rolls out. We end up having 13,000 contracts traded at the 220 strike for Novavax, kind of giving you a sense of where the target is. So as we go this week, we may continue to see volatility. So watch the early movement, watch the option volume, particularly around the at-the-money strikes, find where there's activity. Again, we're seeing that we may push through 220. So again, this is one to watch this week, looking for some volatility. MRNA, again, intraday, huge move today, up 17%. And again, a very, very similar pattern as you look at this August expiration here. As I scroll down, it just kind of what? We started at the 450, we kind of moved out a bit, 480, 485, out to 500. And that was really the most actively traded today in today's session. But again, even activity starting to pop out at 550. So again, for those that might be day trading oriented, this could be kind of like an AMD situation where the volatility continues, right? Day to day, seeing a lot of movement intraday, similar to we saw, for example, late July, early August. And finally, Clover. So for example, Clover Health, this is one we saw a significant option activity pop up on the 7th. Talked about it in one of my classes. Stock jumped 70%, popped up here. Then we saw puts come in at $12. But today, again, there's been a number of cases recently where we've seen bullish activity come in. This is just another one of those. The stock finished up 9% today. But there could be some excellent intraday trading opportunities. We have earnings coming up here on the 11th after the market close. But today, again, you'll see it here at the $9 strike price. And then eventually kind of rolling out to that 10. This is what happens. It starts to build and we start to see the activity roll out and up, or just up in this case, to higher strike prices as we start to aim for higher and higher prices. So again, another one to watch tomorrow. Again, do we start to see volatility right off the bat? Do you see the option activity come in? We could see a lot of movement in biotech this week, very similar to what we saw with financials last week. Also, with a lot of, so Workhorse today announced, kind of missed in a lot of respects. They had a big write-off from their acquisition and did not fare super well, although we finished higher on the session. However, there was some of the periphery that did pretty well. Plug Power, after gapping and fading on Friday, rallying stronger today. What you're seeing is 2 days of significant volatility. You look at Plug Power, again, in this weekly expiration, a ton of activity here around and just out of the money on the call side. So again, another place to watch for some potential volatility. Fuel Cell, FCEL, Let's look at the chart here really quick. Very similar dynamic. Stock up 14% today. We'll look at what we're doing. We're trading on the weekly expiration. Again, the 7 rolling out to the 7.5 and the 8 strike, and even starting to spill out even further. Again, just representative of the potential for volatility and movement, potentially to the upside. At least that's where the calls are going. QuantumScape, this is a solid state battery company, up 9% today. Again, there's been a lot of fits and starts with these stocks. Again, don't expect a lot of follow through necessarily, but this is certainly an area where we are seeing a lot of trading this week that may create some of that gamma exposure. A lot of these names, for example, have high short interest like Clover and QS. So again, it could engender a lot of push in the stock. Could we see a 30 handle in QS? Might be very reasonable, right, as we go throughout the week. So a couple of stocks to watch just by virtue of the activity that we're seeing today. As we look at the commodity space, again, gold. Interesting that gold saw so much weakness today and had that overnight kind of crash. However, when you look at Bitcoin, Bitcoin was strong today, actually closing at 46,405. I remember last summer talking about what would Bitcoin be trading at if it was trading in line with gold. We're talking north of $100,000. Now, again, are we going to get there? Is Bitcoin going to take the same type of role as gold is today? Probably not necessarily. I remember posting for our website just talking about how the fourth turning is you had the halving last spring a year ago. Again, is that leading to greater and greater adoption or acceptance of Bitcoin? We'll see. But for right now, gold selling and Bitcoin's rising. Of course, that's helping the periphery here. MaraCoin, for example. As we look at Riot has earnings coming up. I think it's on the 10th here. So tomorrow after the market close. Coin. And we've talked about this in a previous video as well. August 10th. So again, tomorrow after the close on Coin. BTCT, this is a company we followed for since back here when we saw significant activity come in. The stock was around 7, ended up going over 100% that day. Again, we're seeing that continued volatility. Now today, the activity was really centered on Coin for the most part. Again, this is probably the most fundamentally sound company of the group. If you look at Mara and Riot, they don't have great cash flows. In fact, there's negative cash flow despite high Bitcoin prices. But when you look at Coin today, you'll see that we saw significant activity on the call and put side of the equation. But again, it was the weekly expiration. Again, just pointed to continuation here of potential volatility at the 300 strike. So we get kind of an upside indication, 300 by the end of the week. We had a 27-point market maker move or expected move for the week, $27. So again, you got to kind of think about where we're at currently. That might be a relatively, it's basically pricing in that amount of movement, right? The $6 cost at 300, that puts you at 306. We're currently at 280. So again, just providing some direction. Doesn't mean you have to trade that specific strike price, but as you look at it, some expectation that maybe the earnings might come out relatively well. And as you look at the volatility is rising as we go out of the money. Could be a reasonable kind of just an out of the money long call vertical where you're buying the low and selling the higher implied volatility. If you're wanting to just take a directional bet on earnings, not necessarily knowing how far it's expected to move. We might expect this thing to push towards 306, 307, which goes back to the prior highs on May 12th. Another stock today, Hain. Hain, this is kind of a natural food. So if you go to Analyze tab in here, you'll see it's an organic and natural products company, right? So as you consider this, again, it's kind of defensive-oriented. Staples did perform relatively well. They do have earnings coming up on August 26th. This was a September 40 call that was bought on this one. And again, really interesting. These options are not traded very frequently. The volume was call sizzling 512 times the average. Again, normally not traded, but it came in very big print here. 7,000 contracts bought at one print for $1.95, and that really began to move the stock. As we start to look at $40, it's at the money. But again, where do we expect it to go? And we could get back to a 61% retracement, might push towards $44, maybe as a pre-earnings run, and then we'll see what happens after that. So let's finish our discussion today with just looking at the SPX for a minute. So if you guys had a chance to watch or to read Market Watch today, there was an article that quoted Professor Bierman, our own Professor Bierman here at TheoTrade. But the concept was that, as you look at the RSI, things are relatively extended on a weekly time frame. So we look very long term. We don't get above 70 very often. And yet, since April, we've been very, very extended up here with the RSI above 70. At a similar, kind of duration above back here, for example, late 2019, early 2020, just kind of pointing to the overbought nature of the S&P at the moment. And as you bring that back to the VIX of the moment, the VIX is settling in here around just above 16. You look at the SKU index, where we're at right now, we're at about 150. I mean, the market for the VIX, for example, is reflecting that possibility. And so as you look at SKU and you look at 3-month to 1-month volatility, we're at a 1.27. What that means is that the 3-month VIX is 27% higher than the 30-day VIX. So we're saying we have big expectations for future volatility here. So when you put that in perspective, this is a point in time where you got to be cautious right now, as the skewed nature of SPX returns suggests that we may have more limited upside relative to the downside right now. And that condition's been around for several months in the market, and since April, for example. But again, we just did not reset things with really any sort of 5% plus sell-off to help kind of bring things maybe a little bit back more into order. So again, we're still kind of looking forward to that when it will happen. But at least we have areas that we're looking at that have some movement, that have some potential volatility. And I'll kind of wrap this up on the downside here with Crocs. So today, Crocs, it was just a decent size, downside put spread. We're currently at 140. We're really high. We're just coming off the earnings. And as you look at what happened in today's trading, you'll see a September, 39 days left. Bought the 130, sold the 120 for about $2. So it's about a $2 cost for a downside outlook here to 120 on Crocs. So it's not a major move. But again, as you look at and you consider, for example, a volatility where you're buying the lower, selling the higher, it does make it a little cheaper to take some of those downside shots in the market just using verticals out of the money here. So anyway, folks, I hope this has been helpful for you as you think about, areas of opportunity, certainly focusing for some volatility areas, biotech, looking at some of the EV space as well. We've also kind of talked about a couple of other stocks that may have some movement and the continued trend in financials here. Anyway, good day to be with you today. Have a good one. Thank you.